I can't believe it. The type of crap that I see out there people doing with their money, you might as well just burn the money, give it to charity, or buy the freaking options course that I have below, which is guaranteed to change your life. Coach Henry here, back with a video about proper asset allocation, guys. How should you be invested? I'm gonna go over how to be invested if you have very little in your portfolio, or if you already have a medium-sized portfolio and you wanna grow it to 6 or 7 figures. This video is going to help you not only make more money, but also have lower risk in your portfolio so you can make more gains at the end of the day. If you can watch the hype stock videos on YouTube about 1000x your returns, then you can give me just 5 minutes to actually tell you what I paid $300,000 for to Drexel to get my finance degree. And this is actually gonna make sense and help you guys not lose money so you can build long-term wealth. Now, I know you guys wanna get rich quick, but I'm gonna tell you guys what you need to know and not what you want to know, because recently the stock market has been choppy, it's been volatile, there's potentially a dip, there might be a second dip. So I wanna protect your guys' portfolio. Just make sure you subscribe and like the video. I go to the gym, I try to look good for you guys. The least that you can do is just subscribe to the channel because we're about to hit 100,000 subscribers. Now, the main asset class for reference before I tell you guys how to invest money is number 1, stocks, bonds, crypto. Yes, crypto is an asset class. It's one of the best asset classes out there. Another one is REITs, and for the US folks, you're gonna have international markets and emerging markets. Of course, there's also real estate out there, but I'm going to be talking about what you can hold digitally in your portfolio with Fidelity, TD, Robinhood, Interactive Brokers, Webull. It doesn't matter. I'm going to be talking about what you hold digitally in your portfolio. Now, number 1, how much stocks should you be holding? This fully depends on your age. There's a common rule out there where you take 100 minus your age, and that's exactly how much stocks you're supposed to have in your portfolio. So if you're 35 years old, you would hold 65% stocks, and the rest would be in the other asset classes that I'm going to be discussing. Now, guys, that doesn't mean that you're gonna have 65% of all your money in CCIV because a YouTuber said that this stock is gonna make you rich very quick overnight. That's not how things work. That's not how you should operate, because 65% means that you have a diversified portfolio of many different stocks. Now, what I learned in college and what they told me is actually diversified is about 12 different stocks. That is the textbook answer that you should be going with. That is, for me, the magic number that you should have in your portfolio of stocks. Now, take a look at this image right here. You get a drastically lower standard deviation in your portfolio, which means it won't fluctuate like a roller coaster, and you don't need to have more stocks after 12 to 15 because the benefits start to have diminishing returns, as you can see on the curve. So most investors should own 10 to 20 stocks in their portfolio. Fewer than 10 stocks is just too little diversity and too much risk concentrated on too few positions, guys. That is, unless you make a very high income and you're comfortable accepting that you may lose or gain a lot more than expected. More than 20 stocks is also just too diversified, like an index fund, and too much ongoing work for the average investor. I always just want to slap my head when someone tells me that they have 1 or 2 shares of 300 different holdings. Congratulations, you have a full-time job staring at your portfolio all day for no extra benefit, as opposed to just holding an index fund, guys. Another important mention I have about holding stocks: you should have 12 stocks that are in different industries so you're not tied too much to one industry. I don't even know if there is 12 EV stocks, but you can't have all your investments betting on the same industry. That just makes no sense because they move together and typically they have a lot of correlation to one another. If one goes down, the other one goes down with it, so you're not properly using asset allocation to your advantage. Believe me, after working at Goldman Sachs, I saw the richest investors in the whole world, billionaires, they focus on asset allocation because, guys, at the end of the day, asset allocation is gonna drive a majority of your returns. So take this tip away from stocks before I move into what else you should be owning. Having at least 10 stocks, make sure you have all types of sectors like consumer, technology is a favorite one, healthcare, industrial, financial, and some disruptive innovation. Now, when it comes to growth versus value, no one strategy wins 100% of the time. Just think about it. Do you win rock, paper, and scissors by playing paper 5 times or 10 times in a row? No, right? You need to vary your strategy. The same goes with investing, so you want to vary between growth versus value. In 2020, Cathie Wood killed it, but in 2021, she's down more than Coca-Cola stock, which barely budges to begin with. So what does that tell you guys? You want to be mixed between some growth stocks and some value stocks. I would still lean more on growth stocks because they have a lot of return potential. However, you are making a mistake if you don't at least have some of the value stocks like Johnson & Johnson, Apple, Amazon, which is now falling in between growth and value, Facebook, Microsoft, Disney, etc. There's a lot of good stocks out there that have good growth that also have value metrics. I would recommend 80-20 with more going to growth if you want to have a decent mix. Next, we have bonds, and honestly, I'm just not that interested in bonds. They don't have very good returns right now. Interest rates are low, so I'm just gonna skip to crypto because bonds, they just don't really make that much sense right now. Their yields are so low, and I would rather go with a high dividend stock rather than a bond play right now. Go out there, grab AT&T or another high dividend consistent payer because that's gonna pay you more money in dividends than the bonds are currently paying. If you have over $500,000 and this is your retirement portfolio and you're over 45 years old, then okay, fine. If you really want some bonds, you can have 5 to 15% of your portfolio in bonds. But if you're younger and you want to have more risk and more returns, you should, in my opinion, not really have too much bonds in your portfolio, at least in 2021. Typically, I never tell any of my coaching clients that they should have any bonds, which by the way, you can book below. You can book a session with me if you have any questions and you want to get started with stocks or options and you just want more education. Next, we have crypto. This is an area that I was not formally taught about in school. So, I basically thought this was BS. I thought it was some kind of fad, but boy, was I wrong. I had to educate myself about crypto and I learned that this is one of the most valuable asset classes out there because the economy is becoming a digital economy and cryptocurrencies are going to be a big factor in that economy going forward. I would say 5 to 10% of your portfolio is a nice generous amount that you can invest in if you're forward thinking. And by the way, you can handle the volatility because cryptocurrencies are a little bit more volatile than stocks and definitely much more volatile than bonds. I would mostly go into Bitcoin and Ethereum because they're the top two most solid cryptocurrencies out there. They have the biggest market cap, they have the lowest volatility, and they have the most people investing in it. I would also potentially do a little bit of some others like Cardano, maybe a little micro amount into Dogecoin and other coins out there as well. But the bulk should be stable coins that have successful and long track records. You can also do something like BlockFi, which I have in my description below. They give you 8.6% interest on Bitcoin. So I would say that this is a perfect mix of crypto and high interest investing. That's why I said bonds just don't make any sense because you can get a $250 deposit bonus, and that's way more lucrative, at least in 2021 and 2022 probably, because bonds have absolutely no interest. I mean, recently they've gone up to like 1.5%. I mean, big deal. That's still lower than inflation. Interest rates have been so low for so long, I can't see them rising any more than maybe 3 or 4% during this decade, so they almost make no sense. Now, the rest of your portfolio can be emerging markets and international markets if you're living in the US. And of course, if you're living outside of the US, well, you can pretty much invest in the US because for you, that is kind of the international market. Now, let's start talking about international markets first. So if you're gonna be investing in other areas like Europe or Australia, they have very similar economies to the US where they're more westernized. They have more technology-focused jobs, and they are growing a decent amount. If you want to diversify outside of US, those are good options that you should have. Maybe I would put another 5 or 10% of your portfolio in international markets. Now, the last thing that I want to mention is emerging markets, because emerging markets are the countries like maybe Brazil, maybe it's Colombia, it's Asia, it's Vietnam, which by the way, Vietnam is scheduled to grow way more than any other country out there. These countries are really growing rapidly in terms of their GDP. They have a lot of urbanization where people are moving from the suburbs into the cities to get higher paying jobs. They're more technology focused. Their population is growing. People are immigrating to these countries, such as digital nomads. If you're not familiar with digital nomads, these are people that work on the internet. And recently, with a lot of remote workers, they're realizing that they don't have to be in high-cost cities like New York, San Francisco. These tech workers can just move to Vietnam and live in a place like Vietnam for like $1,000 a month, or Thailand for like $800 a month, and they can live a king or queen lifestyle on a lot less money. So I suspect that the world will continue to globalize in certain areas like Vietnam, Thailand, Philippines, all of these emerging markets, in my opinion, are going to grow much faster than more civilized Western economies. So there you have it. You want to have a diversified portfolio of stocks, international, emerging markets, as well as some cryptocurrencies. If you like this video, let me know what else you want to see. I hope you enjoyed this video. Let's get to 100,000 subscribers, guys. I'm just trying to make you guys stupid rich. Thank you so much for watching, and I'm going to see you guys in the next video.
No one ever sees me.